Market watchers Sean O'Hara and Jeff Saut. Hello, how are you both doing?
Great. How are you, Blake?
Good. Jeff, I'll start with you. What are we seeing today? What's your read? What's your take?
Well, there's not anybody around. I mean, you could roll a bowling ball across the floor of the New York Stock Exchange. You've got hedge fund liquidation. You've got tax loss selling. You've got mutual fund liquidation. And the pros have headed to the Hamptons, and they're second in command, and they're told not to stand up to it. If you're making a market in stocks and they want to go down, let them go down. If they want to take them up, let them take them up. Is it that, or is it computers? Because you raise a good point. This should kind of be the week where, you know, you go on your vacation, wherever that might be, and, you know, but we're seeing this big gyration. Steve Mnuchin's talked about this. Is it just the computers jumping in, and we're starting to see that as a side effect, Jeff? That's certainly got a lot to do with it. More than 50% of the trading is push-button trading now. But it's really selling into a vacuum. And yesterday's buying was into a vacuum. And until the pros come back in January, you should really put blinders on and not pay a whole lot of attention to it. Sean, what are you seeing today? What's your read?
I was just thinking to myself, we must have done something terribly wrong if we're supposed to be on vacation and we're here. But
this is always like the busiest work week of the year. I always say it. I always tell myself I'm going to take this week off, and then, you know, here I am. But anyways, go on.
Yeah, here we are. I mean, I think Jeff's point is true. When you look at the volume, it's been pretty anemic. But there's also some things out there that are kind of spooking people. The trade issues are worrying people. The Fed policy is worrying people. Wage growth is worrying people. You know, if you just were to be able to book next year's S&P earnings at $177 and apply a multiple to it, I think everybody feel much better. It's the getting the 177 that may come under pressure for some of that. And then I think there's one last little bit of this, and that is that we've had a long bull market in terms of the number of years. It's not the most historic in terms of percentage increase, but I think as it continues to extend itself, people get a little more nervous, and they don't want to be the last one to the exit. And so a little bit of jittery as well. And I'd be a little nervous between now and the end of the year because there aren't any participants, and I still think there's some more tax selling that needs to happen.
You know, big picture on this, Sean. When you look back and you see such a great day yesterday, historic day, biggest point gain ever in the Dow, what does it say that just like that, bang, there was a sell-off?
Well, I looked at some numbers this morning. It's kind of interesting. If you go back to 2000 and look at all the 4% up moves in the market, almost 80% or more of them occurred during an extended market decline. So a big up day like that doesn't necessarily mean that everything's over on the downside, nor is it an indication that things are going to get worse. But historically speaking, when you look at all these big moves going back at least 18 or 19 years, more than 80% of those big moves, the 4% or more, have been occurred during a decline. So it's just probably a normal part of the function of the market until it finds its level and moves forward from there.
So I guess that leads to the next question. I'll give it to you, Jeff. When does the market find itself, and how long is this decline going to continue?
I think the decline is pretty much over. The market's got totally washed out.
You think this is the end of the cycle?
I don't think it's the end of the secular bull market. I mean, the 1949 to 66 bull market had a number of 30% plus pullbacks in it, but it didn't end the secular bull market. The 82 to 2000 had the crash, but that didn't stop the secular bull market. It went on for another 13 years. Secular bull markets tend to last 14 plus years, and I think this 20% down represents a bear market is not the right metric.
Sean, President Trump, last word to you, essentially said buy the dip. Smart call on him or no, as we look forward?
It hasn't been very smart for the last part of this year, but generally speaking, if you've got a long enough time horizon, I think you should look at this as an opportunity to find stocks that you can buy very inexpensive versus either their earnings or their free cash flow, which we love to measure at Pacer ETFs. And I think if you have a long enough time horizon, you should be licking your chops a little bit to enter here at some of these names.
Yeah, the president didn't say buy the dip. He said essentially, he called it, I believe, a buying opportunity. In any event, we'll leave it there. Sean O'Hara, Jeff Saut, thank you very much. We'll have you back in 2019. See you then.